The amazing customer support that we've received in the first 6 months of our launch. We launched both Eurodollars and US Treasuries back in March of this year. So on September 21st, we're going to celebrate our first 6 months of operation for both NYPC and our interest rate complex. And we really do have a very wide and diverse group of customers that have been early adopters, if you will, to the platform and have really driven both the growth in volume and open interest that we've seen. But I think what is most distinguishing our exchange from others is that we have had real buy-side support from some of the largest asset managers in the world that have, again, been early adopters to the platform. They see the liquidity, they see the value, they want to support competition. It actually requires a fair amount of work for customers to adapt, and integrate with the new platform. Generally, it's not a matter of just flipping a switch and trading. They need to modify systems. Sometimes there's an internal approval process that you need to go through. So we are working through that with an incredibly exciting array of customers. So while we have had some early success, our market share and our open interest will only grow as we're able to broaden the group of active participants that we have in the market. And we have a terrific pipeline of tier one clients of all varieties that are working on integrating with our platform. We were very pleased to announce that ABN AMRO, Citibank, and Bank of America Merrill Lynch joined NYPC as clearing members. You may have seen the press release that came out from Citibank when they announced that they were active clearing members on NYPC. They mentioned that they had cleared the first trade for BlackRock on our platform, which is obviously the world's largest asset manager. So we're thrilled with the level of support that we have seen from the FCM community for our platform. We do have a pipeline of another 4 large global FCMs that are in various stages of integration. But even more importantly than that, this whole platform, NYSE Liffe U.S., is really built upon the premise that capital efficiency will attract liquidity. As we started thinking about building this platform back in 2009, there was a pretty safe bet at that time that with Dodd-Frank and all the global regulations, Basel III coming down the pike, that the capital demands on all market participants were going to be much higher. So now you fast forward 2 years later, and lo and behold, that's exactly the situation that most clients find themselves in. So this idea of capital efficiency, of bringing various pools of assets, cash and derivatives together, and offering capital relief back to the market is really resonating. And since we launched NYPC, it's performing exactly as we had hoped it would and as we designed it. Early Q1 of next year, right now NYPC is going through the process of integrating both Eurodollar and Treasury options into their VaR risk methodology so that customers who trade options on our exchange and clear them at NYPC will get the full benefit of the single pot margining of the offsets between cash, futures, and now options. So it just further broadens the pool of liquidity to provide capital relief back to the markets. We'll look opportunistically at expanding our options business going forward, but it's a big initiative to launch Treasury options and Eurodollar options. Frankly, it's an area where no one has really ever challenged the CME. Every product that we launch and that you'll hear from us going forward are really going to leverage this theme again of capital efficiency attracting liquidity. So if you look at the pool of available collateral at FICC, of course it's US Treasuries, repos, agencies, agency mortgage backs. All of those products lend themselves to new futures and derivative products that will fully maximize the value of the single pot margin methodology at NYPC. Well, I think we have. I think we've surpassed most people's expectations. You know, people have called us one of the most successful new exchange launches in recent history, and you know, I think that that's right. If you look at specifically the growth in open interest at NYPC, we're just over 800,000 lots of open interest in Eurodollars. That's 8% market share in less than 6 months. I think that's remarkable. There's no new exchange that's ever come close to that kind of market share and those kind of numbers. If you look at the breadth of clients that I referenced earlier, the asset managers, the banks, the trading firms, globally all coming together to support a new platform, I don't think that that has ever happened before either. Well, you know, it's really for us, our metrics aren't around specific volume numbers, although we keep crossing significant thresholds in terms of volume and OI, and that's certainly nice. For us, we measure success one customer at a time. When we take large asset managers and we explain to them the value proposition and we get them excited in the platform and we work them through the integration platform and we see them live and trading, that's how we measure a success. As I look towards the end of next year, I'm going to measure our success in the number of new clients that are entering our platform. The pipeline looks great, and I hope that we can convert all of those to live trading clients. So that's how I'm going to measure our success more than any mathematical volume or open interest numbers.